Hello traders, welcome to the Trading Journal. Today, I will show you a really easy, and yet effective trading strategy. We will use just the CCI indicator and two moving averages. It will be fit for you, if you are new to trading, or if you are trying to find a strategy with certain rules. But before we begin, please smash the like button for more trading videos, and don't forget to subscribe and ring the notification bell, so you don't miss out when I upload new content. First thing first, let's open tradingview.com. Before you ask, let me tell you that you can use this strategy in Forex, stocks, and crypto markets. You can apply the same strategy in any instrument you want. The strategy we will use is called the CCI, Moving Average Strategy. So let's add the indicators we will use. To add them, you have to find this indicator's icon on the top menu. And we will search for the CCI, which stands for Commodity Channel Index. You can add it to your favorites by clicking the star icon next to it, and we will need some moving averages. For this strategy, we will use the exponential moving average, which gives more weight to the recent price. I will add two EMA lines, and I will adjust their settings. I will adjust their lengths first. The faster one will be 25, and the slower one will be 50. I will also change their colors, so it will be easier to track them. We will use the CCI indicator with its default settings, so there is no need to change anything about it. Okay, now we have everything we need. I am looking at the 4-hour chart and the euro to dollar chart now. You can use different pairs and different time frames. But this strategy works better with bigger time frames. Because in smaller time frames, there will be lots of signals, and there will be lots of noise. So, I recommend you to stick with a time frame bigger than 30 minutes. You can see every change we have made on the chart. Feel free to pause the video, and take a screenshot if you want. So, let's talk about the strategy. As usual, I will explain the strategy with examples. The CCI indicator shows overbought and oversold points. You can see that there are two lines on the CCI indicator, 100 and minus 100. If the value is under the lower line, it means the market is oversold, and if it is above the upper band, it means the market is overbought. I know what you might think if you are new to trading. You ask yourself, what would happen if you go long anytime when the CCI indicator is oversold? Well, let me save you some time and money. You are most likely to lose money if you do so. Because trading is not that simple, and you should never trade with a single indicator. Now, let's check our first example. First, we will wait for a moving average crossover to occur. Let me show you how it will look. In a long setup, we want to see the blue line, moving above the yellow line. Since the blue one is the quicker moving average, it indicates a bullish momentum, when it is on top. So it was our first rule to follow. But we will not go long as soon as the crossover occurs. Because it was not our signal yet. The CCI indicator will give us the entry signal, not the moving average crossover. We will wait for the CCI indicator to reach an oversold area. You can see that it happens here. This is when we will open a long position. We want the CCI to reach an oversold level, which is lower than minus 100. And we will go long as soon as it changes direction as it happens in this example, and we will go long at the next candle. Actually, it is a really good entry signal, because you can see there is a long shadow in this candle. It tells us that the price tried to move down, but failed, and it is most likely to go up now. This is when you want to go long. I will open a position at the next candle, and put my stop loss just below the lowest point the price has reached. You can put it below the 100 EMA if you are more conservative. It will give more space to your trade. And I will put the take profit target at 2 times higher than the stop loss. So our risk-reward ratio will be 2. It means I am trying to make 2 times more than I risk. If I am risking $100, I am trying to make 200. Do not worry if you didn't understand everything in this example. I will show more examples, and at the end of the video, I will share a cheat sheet with you as usual. So you don't have to take notes while listening. Now I am going to show you a short setup. Just like the long setup, we will look for a crossover, but this time the faster moving average should move below the slower one. Because it indicates a downwards trend. You can see it happen here. But we will not open a position immediately, because the CCI indicator hasn't given us the signal yet. It is still at the oversold level. The strategy we use is a pullback strategy. So we should wait for a pullback, and we should wait until the CCI reaches an overbought level. Our entry signal comes here. At this candle, the CCI level is 140, and at the next candle, it is 138. This means the CCI indicator changed direction. So, We will open a short position at the following candle. Similar to the long setup, I will put the stop loss just a little bit above the 100 EMA. The take profit target will be 2 times bigger than the stop loss, which gives us a risk-reward ratio of 2. You might have noticed that, if you have put your stop loss above the high of the candles, instead of the 100 EMA, your position would be closed, and you would miss a potential win. This is why giving your trade space to breathe with a proper stop loss is important. Before ending the video, I want to be sure that you understand everything. So, let's move to another example. I hope that, now you are able to tell if it is a long setup, or a short one, by checking the crossover. This one is a long setup, because the faster EMA has crossed above the slower one. And we are looking for a signal. Here you can see that CCI touched just below the oversold point, and changed direction at the next candle. It is our signal. We wanted to go long at the opening of the next candle. Just like the other ones, the stop loss will be just below the 200 EMA, and the risk-reward ratio will be 2. As you see, this trade was a winner too. But I would have skipped this one, because there wasn't a second confirmation, such as a candlestick pattern. If you want to increase your win rate, you should mix this strategy with candlestick patterns. If there is an engulfing pattern, or a doji candle when the signal comes, there is a bigger chance that the trade will work in your favor. Let me answer a question you might ask: what happens if we get a second signal after the first one? Like it happens in this example. Well, it is up to you. You can enter another position if you want to. But personally, I just trade the first signal. And there isn't any important reason behind it, I just haven't backtested the second entries. So, I don't know the win rate of the second signal. This is why, I won't take the second trade here. As you see, I have missed a potential winner here by not opening a position. You can enter second signals if you want to, as you see, they can be profitable. But please backtest it first before using this strategy. Actually, you should test out every strategy before using it, not just this one. You should never trust a strategy you find online, and you should backtest everything on your own. And by backtesting, you will see the win rate of each strategy, and you will be more comfortable trading. I hope that you understood everything, but feel free to ask me anything you want in the comments. I try to answer all of them. Now I will share a cheat sheet with you as I promised. Please feel free to get a screenshot, or write it down, so you can use it as a checklist while looking for entries. As an exercise, you can write down these rules, open some charts, and try to find entries that satisfy these rules. It will be boring, but in the end, you will understand the strategy way better. And these kinds of exercises will provide you the discipline that you need while trading. Also, you can see this exercise as an opportunity to backtest the strategy. Well, I hope you found this tutorial helpful. If you did, all I want in return is your thumbs up, so my content can reach more traders. Also, don't forget to subscribe and ring the notification bell, if you haven't done it already. Have an amazing day.